Hi and welcome back to Cheeky Crypto. My name is Nick and today we're going to be talking about the S.E.C attack on crypto. We're going to be jumping down into a few different things, taking a look at the recent developments with what is going on with 𝗕𝗓𝗪𝗓, the S.E.C, and potentially the risk that is open to cryptocurrency exchanges. As we get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Okay, guys, let's jump right on down. Let's get right into it. And we'll start things off by taking a look at, well, the kind of familiar stuff that you probably will be aware of, right? The S.E.C charged Kraken with unregistered offer and sale of securities through its stake as a service program. Whether it is staking as a service, lending, or other means, crypto intermediaries must provide proper disclosures and safeguards required by our laws, which obviously is the US. Now, essentially, I just see this as another way for Gary to throw his weight around. Essentially, what he's doing here is causing billions of dollars of damage to retail investors just because he's trying to get a little bit extra money in the back pocket of the S.E.C. I have no idea. Their whole mission statement should be to protect the, or is to protect the retail investor. Yet time and time again, all we seem to see from the S.E.C is them essentially causing more damages and hurting retail investors before doing anything such as protecting. Most recently, we have seen that they have demanded that their fines be paid before retail investors are reimbursed from bankruptcy hearings, which tells me exactly what their goal is. Essentially, look out for themselves, not for the retail investor. But let's move on because there are a few additional things that are coming in here that is quite interesting. So obviously, Kraken has agreed to shut down its cryptocurrency staking operations to settle with the S.E.C. And, you know, I think this is quite disappointing. I understand it, but I do think it's quite disappointing from the S.E.C to go ahead and do this kind of thing. But let's move on, right? So 𝗕𝗓𝗪𝗓 is embarking on a midnight massacre in an attempt to bring all of crypto under his control. In the coming weeks, the S.E.C, NYDFS, and the US OCC will be bringing enforcement actions against cryptocurrency exchanges, banks, and entities that mint tokens in an attempt to label the majority of them as securities. I'm told 𝗕𝗓𝗪𝗓's strategy is to bring as many enforcement actions as possible while the 118th Congress is still getting its bearings. Now, this is a hugely alarming thing. But there's a few things that we probably need to be aware of within this, right? Is the attack on cryptocurrency exchanges. It is ongoing. We are aware that many of these cryptocurrency exchanges are struggling, specifically in the bear market. The recent rally that we've had has saved a few of them from bankruptcy. They've been benefiting massively from this recent surge to the upside, which I've been saying on the channel doesn't appear to be driven from demand, but actually seems to be driven from Forex traders dumping USD in favor of other assets and basically dropping the DXY, the value of the dollar, down. Okay, so as the DXY goes down, you need more dollars to buy other assets like Bitcoin, for example, right? We've been talking about this for a few weeks now. So essentially what we're seeing here is more of an attack on those exchanges. Now, they've been benefited because they have been able to kind of liquidate assets and kind of get a balance sheets in a better financial position than they were previously. So hopefully some of these exchanges will be okay, but then of course you have this attack from the S.E.C that basically compounds the issue. Now, as we move on, some S.E.C members call latest action for attacking staking and crypto firms as completely wrong and crash for industry. So it is bad, and it's obviously not everyone at the S.E.C aligns to 𝗕𝗓𝗪𝗓, which is pretty obvious because, I mean, you'd have to be an absolute freaking moron to want to side with 𝗕𝗓𝗪𝗓. But there you go. The US Exchange Securities and Exchange Commission has launched another attack on crypto exchange Kraken, forcing them to halt their staking program and pay a $13 million fine. Of course, you know, that goes right in the back pocket of the S.E.C, even though they get funding elsewhere as well. And we might admit, you know, they need that that funding to wreck even more retail investors, but you never know. In response, the Washington, D.C.-based Blockchain Association of over 100 crypto companies has issued a statement that the SEC's actions is part of an ongoing attack on the industry. And I totally, wholeheartedly agree that it is an attack. And essentially what the US are doing here is creating a very unfriendly regulatory environment for crypto companies in the US. So what does that naturally make you want to do? Well, leave the US and take your operations to the rest of the world that is a little bit more forthcoming with this new emerging technology. So the US will be potentially left behind in this if they do not start actually putting in some corrective action. Let's move on. Update. Gary Gensler is on CNBC this morning. This should put everyone on notice in the crypto industry. Everyone in the industry should come into compliance. What goddamn compliance, right? If you are not creating a framework of what to be compliant against, then you've got to sort that out first. You've got to create the framework and then regulate afterwards. You can't go ahead and try to regulate through enforcement action. That is absolute BS. But nonetheless, this is what Gary Gensler is trying to do. Attack, 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 attack whilst he can. But I don't think it's going to be long-lived. Personally, I think that the decentralization and nature, or the decentralization of cryptocurrency in its nature, I should say, is something that is going to persevere and is something that is going to allow for people to rally up and basically just put an end to this tyranny. But we'll see how this kind of continues. Now, Gensler uses the phrase, "not your keys, not your coins," signaling further action against exchanges, which then brings me on to something that I think absolutely everybody needs to be aware of. Get your crypto off the exchanges. He's going after, the SEC are going after, or Gary Gensler is going after cryptocurrency exchanges. Now, if you've gotten holding your crypto on an exchange, then you put your crypto at a risk that's not necessary. Okay, so in the description down below, there's an affiliate link to Ledger. Now, there's many other brands. You don't have to use our link, but using our link, we do get a kickback, just so you're fully aware. That's kind of one of the revenue streams that we have on the channel. That if you do use that link, we get a kickback. Now, when you buy a Ledger or hardware wallet, or any other hardware wallet for that matter, buy it directly from the manufacturer, right? So the link below goes directly to Ledger, right? This website just here, where you can go ahead and buy yourself a hardware wallet. Take your crypto off the exchanges and put it into a hardware wallet. Okay, in doing so, it means if something happens to that exchange, you're safe. Your crypto is safe. It is not going to get used in a bankruptcy hearing, like we've seen with Celsius, like we've seen time and time again with many other platforms as well. Okay, so make sure that you are looking after your cryptocurrency assets, right? Gary Gensler is attacking cryptocurrency exchanges. He's used the phrase, "not your keys, not your crypto," is signaling that, you know, he's going after those exchanges. So get yourself a hardware wallet if you haven't done so already. We like Ledger. We're affiliated with Ledger. That's in the link in the description down below. You know, if you go to a third-party website like eBay, like Amazon, you run the risk that you buy an altered, hacked variant of a hardware wallet. We've seen it a few times in our community where they bought them off Amazon, and they were not buying it directly from Ledger via Amazon. They were buying it from a third-party seller on Amazon. Unfortunately, a hack device that allows people to bleed your cryptocurrency from your device. Buy it directly from the manufacturer. Do yourself a favor. Get off the exchanges. Linked in the description down below. Let's move on. Okay, so from here, we also have seen the New York regulator launches investigation into BUSD and USDP stablecoin issuer Paxos. So again, not only are we seeing attacks on exchanges, we're also seeing further attacks on stablecoins. So be aware that certain stablecoins are, you know, heavily regulated, like BUSD. I believe Paxos is doing a really good job at making sure that everything is backed one-to-one and has transparency and all that kind of stuff. We quite like BUSD on the channel. Haven't got a problem with it. But if you're holding some different stablecoins, you should probably be aware of what it is you hold, the risks that you hold with that, and all that kind of stuff. So just be really, really aware that there's attacks not only on exchanges, but there's also attacks happening on stablecoins, because a stablecoin, a privately owned stablecoin at that, is direct competition for the CBDC. And well, in the UK, we've seen a lot of framework stuff happening here in regards to the digital pound, the Bank of England's CBDC. So things are moving along quite nicely in that world, right, of CBDCs. We don't like them. They're a necessary evil, though, in my opinion. But be aware that there's an attack on stablecoins, just like there's an attack on cryptocurrency exchanges. I think essentially cryptocurrency exchanges don't want to be banks, but banks want to be cryptocurrency exchanges in the future. That's kind of how I look at it. And basically, an exchange is a bank's competition. Stablecoin is also a bank's competition. And therefore, these things are going to try to be regulated out of the space. Be cautious, be aware of what is going on in the space, and try to protect yourselves wherever possible. In terms of all of the stuff that we've recently seen, we have seen the price action of Bitcoin pull back a little bit. This isn't unexpected. We were kind of expecting pulls to the downside regardless. So, you know, we've seen a bit of a move to the upside. We were expecting a move to the downside. It's not unusual, but, you know, just be aware that this is going to be rocking the crypto space quite deeply. I'm not saying necessarily new lower lows, but I am expecting some kind of negative impact on the crypto space overall. We've seen a lot of gains in altcoins, specifically things like AGIX, SDAO, NewNet, FRA. A lot of the microcap coins have had some money poured into them. So maybe it's time to think about profits. Now, I'm not a financial advisor. I can't give you financial advice. All I can do is tell you that the US are going after crypto and they're not going to be easing up. Right now is a time to be cautious, but also a time to be greedy, right? Not when the prices are high, but on the retracement, it could be a life-changing opportunity to get into some of these projects, provided that you are able to get in and get off of the exchanges as fast as possible with minimal risk. Guys, do your own research. Join us down in Discord for more helpful tips. I'll leave this video right there. If you found it useful, smash the like button. If you're new to the channel, subscribe. And guys, I'll catch you all in the next one.